Hello everyone and welcome back to the channel. Guys, in this video today, I'm going to explain to you one of the strategies that helped me make a lot of money trading options, okay? This is, I'd say, probably my third best option strategy. Of course, always think in the long term, okay? And of course, I'm going to show to you guys the results and the outcome of this strategy compared to just buy stocks upright, which we'll do anyway, okay? And for those of you that have been following my channel, don't forget, first link in the description below, guys, option roadmap. And I will include this strategy with the trading journal, okay, and all the PDF information how to trade this strategy into this ebook here as well. It's free, by the way. Just click on the link below, download for free, and the update versions of this ebook here will be sent to you. How? Because I'll have your details and I'll be sent to you guys the next version with all the strategies included, okay? Of course, what I'm talking about, you guys probably guessed, it is, guys, LIPS, okay? Very let's say common strategy amongst those people that are more advanced when it comes to trade options. This is not just buying LIPS, guys, 3 months, 6 months, 12 months. We're gonna buy deep in the money, and like I said to you guys, I'm going to show to you the outcome of the strategy in relation to buying the stock and also to buy the call option. And we are going to do a comparison, okay? And I'm gonna use here my TastyWorks. We're gonna do a live example so you guys can understand, okay, how it works. And the main things also you need to take consideration. Why? Because if you want to save money trading option, okay, instead of buying stock, spend a lot of money, and if you also like to in terms of reducing your risk, and if you like to trip your money, these three things, guys, let me put back here so you guys understand. These three things are the things that you should take in consideration using this strategy. But of course, like I always say as well, position size, okay? But nevertheless, thank you very much for the beautiful support, and don't forget, I do not edit my videos, so if we mumble jump too much, guys, it is what it is. But everything I'm gonna tell you guys here is exactly like I do myself, and in future videos I can also go in more details and do the trade management, things like that, rolling the option, turn a long-term LIPS into a cash secure put, and so on to the wheel. You guys can leave your comments below, and I can help all of you, because as you guys can see, LIPS it is, guys, and was responsible for the majority of my gains last year and this year so far, okay? And we are going to use here Nike as example, okay? So very simple. There's no much into it. What we're gonna do is, if you go back here to TastyWorks, the first thing you guys need to understand is when we buy LIPS, guys, we are pretty much, okay, we are going long on a stock, whatever stock might be, okay? Stock XYZ, stock Z, stock A, stock B, whatever it might be. Because basically, if the stock is trading, let's say $100, if you buy right now, if you go above $100, you make money. If you go below $100, you lose the money. So basically, if you buy here in this case here, okay, 100 shares, so it's very simple, okay? Every time the stock goes up by $1, how much you make? You make $1. Every time the stock go down by $1, how much you make? You make $1 here in this case here, okay? So you make $1, you lose $1, come down, and of course you also make $1 with the stock going up. I mean, I don't want to underestimate your intelligence here, but it is what it is, guys. Buy 100, $1 up, $1 gain, $1 down, $1 loss. But what you're gonna do is, we are going to buy a call option here, okay, with the highest delta as you can possible find. And I'm talking about here this thing here, for those of you who doesn't know what it is. So basically, we are gonna buy an option that have a really high delta, that every time the stock goes up by $1, we make $1. Every time the stock go down by $1, we lose $1. So basically, our call option is going to mimic if you were holding 100 shares of XYZ, Nike, Facebook, Amazon, whatever, okay? So our goal is to hold pretty much, theoretically speaking, 100 shares of whatever product might be, but of course paying less because we're going to buy option, okay? Another thing as well, what you're gonna do is, because you're holding stock, we wanna buy a leap here for, let's say, normally, this is just for education purpose only. I'm not a financial advisor, don't forget. But I'm gonna use here just 12 months. But you can use 18 months, 2 years. If I were to put the trade here, why now? Why now? What I'll do is, I'll look for something like 18 months at least. But in this case here today, we're gonna use here 344 days, okay? Which is pretty much close to 1 year, okay? Don't forget. But if you open a leaps, just open like 18 months. So we can do either way. It doesn't matter, okay? So what you're gonna do is, we're gonna come all the way down here, and the date's gonna be 20 of June, okay? And like I said to you guys, we wanna look for something very, very high in terms of deltas. And the deltas, guys, on the call option, are gonna be in this column, as you guys can see, okay? We don't wanna buy here, okay, all the way here on delta here. We don't want to buy a 62 delta. We don't want to buy a 70 delta or 77, whatever. As you guys can see here, it is cheaper all the way down here compared to all the way up here. Why? Because it's cheaper here, because if the stock go down, we lose less. If the stock goes up, we also make less. But we want to be all the way down here, deep in the money, because the higher the delta goes, the more we are going to mimic the movement or change in price direction, okay? It's pretty much, like I said to you guys, it's gonna be 1-to-1 in terms of price change. We always gonna go very, very deep in the money. Very crucial that you guys do understand. So in this case here, we are going to buy this 36.45 ask price, and the strike price, as you guys can see here, it is $40. This is the strike price we are going to buy with a delta of 93, okay? So we're going to buy here a 93 delta. Is almost 1-to-1, so you guys can have an idea, okay? So basically, every time the stock goes up by $1, we make 93 cents. Every time the stock go down by $1, we lose 93 cents. Very, very simple, the concept, okay? So we press here on the ask price, and down here we are going to ask or try to get fill at the mid price, and the mid price here, it is 34.65, and our extrinsic value, it is 123. So basically, guys, if we take, okay, the current stock price, all right, which it is this thing here, this value here, okay, and subtract, okay, let's call the S our stock price, or our current stock price. We're gonna subtract the K, okay, K minus our let's call the cost, but let's call the premium, okay, premium, because we're gonna have to pay. And of course the K here, it is our strike price, and P of premium is the premium that we're paying here to hold this option, okay? So basically what we're gonna get, this result here is gonna be the extrinsic value of that option. So this is pretty much the time value, all right? This is what we're paying extra in terms of time value to buy the $40 strike price here, instead of buying the stock upright. And our maximum loss in this case is gonna be this thing here, 3,465. Why? Because we're gonna pay 34.65, okay, per contract. And remember, guys, each contract, okay, holds 100 shares, okay? Remember, we want to have at least 100, because our goal here is to mimic the same situation if you were to buy 100 shares of Nike right now. So you're gonna buy here one contract, as we can see all the way down here, okay, one contract. So basically we're gonna pay 34.65 times 100 is 3,465. This is our maximum loss, and I'm gonna show you guys how we're gonna have this maximum loss at the Excel spreadsheet, okay? Very crucial that you do understand. Don't forget, if I delete this thing right now, write down there on your piece of paper, something like that. Remember, The Nike is trading now at 73.47. Let me go back to my Excel here. 73.47. And now mid price it is 34.65. Okay, 34.65. 34. What I'm saying here is, guys, I'm just putting this number here, okay, which is the current stock price here. Sorry, I'm just putting this number here into my spreadsheet so you can calculate what I'm trying to explain to you guys, what I'm going to explain to you guys in a second. And I just type this value here into the spreadsheet because we need this mid price here as well, okay? And of course, we need also this number here, which it is our strike price. Very, very crucial that you guys do understand, okay? I'm going step by step, very slow, so all of you can do understand. For those of you that are a little bit more advanced, guys, just skip the video a little bit, okay? Or put on a 1.5, 2x, whatever you like, whatever you feel comfortable, okay? But for those of you that trading for the first time, I want you guys to really, really understand and get the gist how to trade this strategy, okay? So now, if we go to our spreadsheet, so what I did was very simple. I was explaining to you guys. I just type here the values into our Excel spreadsheet, okay? So what I did was I type here the 73.47, okay, which it is this value here, and I type the 34.64, as you guys can see, this number here, okay? Let me see if I can get back my my Excel, my mouse here. Okay, so this is 34.65. This is 73.47, okay? So very, very simple. So the concept here, guys, it is very easy to follow. So in this column here, we have the stock price, okay? Sorry, the stock P&L, okay? This is the theoretical values that we're gonna add here for the stock price. We have the stock price going to 0, from 73.47 to 0, from 73.47 down to 51, 73.47 down to 62, and if the stock stay at same price as it is right now, 73.47. If the price go from 73.47 to roughly 85 to 95, 110, 146, okay, we're going to calculate here. Okay, we're going to calculate. Sorry, let me just go back here. Let me see if I can. Okay, we are going to calculate here. One sec, guys. Let me go back. Great. So we're going to calculate, okay? We are going to calculate the P&L of the holding the stock, and we are going to calculate the P&L holding the call option, which it is our lips, okay? So here you go, just to capitalize on what you did before. We have the stock price here, 73.47. We have our strike price. Remember the $40, which was a delta of, the delta was 93. I put 92, but you guys can change to 93, okay? So basically we are 45 point roughly 6, okay, way from the current stock price. Remember, this is not trading caution, because if the stock go down, we're gonna lose money no matter what. This is just to calculate how far we are here. Let me say here how far we are here from the 73 up here all the way down here to $40 strike price. But don't forget, this is not trading caution, like I said, because the moment the stock goes down, we lose money no matter what, okay? So basically, if the stock price go down to 0, okay, if you go down to 0, what we lose is we lose all the 3,465 that we paid here to have the lips, and the stock price we lose 7,347. You see how I'm saying to you guys here? So basically we're losing here pretty much 50% less, because if the stock goes to 0, if we buy like why now 100 shares, okay, 100 shares here with the stock trading at 73.47, we have to spend 7,347. Okay, but to buy this lips option, we only gonna pay 3,465. So if the stock goes to 0, we are losing here 50% more. If the stock drop to 51.43, we're gonna lose 2,322. Okay, and here we're gonna lose 2,204. So let me delete this thing here. Okay, so here, as you guys can see, we lose 2,200, and here we lose 2,300. So despite the fact that here on a lips, we lose 67% of this value here, okay, of the 3,400, because we lose in 2,300. But in terms of dollar, we only lose $118 compared that we will lose if we were holding the shares. See, there's not much difference, because although you lose 67% of your call option from the lips, if the stock goes to from 73 to 51, guess what? It's only $118 less if you were to hold the stock. So that's how good it is, okay? And here in this case here, let me see if we go back here with the mouse. So if the stock only drops to 62, it's same thing. We lose 1,200 here on the call option, and here we lose 1,100 here on the stock. So basically we're still losing here, guys, $118. Same thing. And if the stock stays as it is at 73.47, as you guys can see, we're still losing here $118. It's the same thing. The amount we're going to lose in terms of we were going to lose holding the stock no matter what, it's not much. It's not much difference. That's how good it is, this strategy. But when, let's say, shit hits the fan and the stock really drops all the way down here, let's say to zero or maybe even more, we are lose way less. Especially if it goes to zero, like I said, we lose here 50% less, guys. It is amazing, okay? But that is when things start to get really interesting, as you guys can see. If the stock goes from 73 all the way to roughly 85, on the stock, we're going to have a gain here of 15%, which is 1,100. But in our lips, okay, we are going to have a gain of 28%, okay, which is almost $1,000. But $1,000 is less than 1,100. But guess what, guys? We only put up front 3,400. Remember, we are losing way less, okay, and we are making way more, because it's a return on your investment, ROI. Very crucial that you guys do understand, okay? We're having here better ROI because it's all about risk and trade management. Don't concern yourself how to make money. Concern yourself how to avoid losing money. Remember, Warren Buffett rule number 1, don't lose money. Rule number 2, don't forget rule number 1. Very crucial, okay? And if the stock goes up to $110 from 73, guess what? We make here, guys, in the options, 100%. In the stock, we make 50%, okay? And if things start to go really crazy, if the stock goes to 146, which is roughly here 100% above what the price was at 73, of course, we double our money here in the stock, okay, as you guys can see. But in our option, we are going to make 200%. Amazing, okay? This is just one of the best strategies you can find out there, guys. And if I come here, for example, let's say I want to change, no, I didn't put, but let's say I want to change this thing here to 2. Let's say stock goes up 220. As you guys can see, if the stock goes up to $220, okay, in your stock portfolio, you'll be doubling your account. But in the options here on the lips, you'll be making 4x. It's a lot of money, okay? As you guys can see, things can go really crazy, and you can start to make a lot of money, a lot of money, okay? Forget about this calculation down here, guys. These 3 here, okay? This is just doesn't apply for what I'm talking right now, okay? But as you guys can see, when we lose, we don't lose much in terms of dollar-wise if we were to lose here in our stock portfolio anyway. But when it comes to making money here, we can make way less, more, okay? So the secret here, don't forget, let's go back to TastyWorks. What I want you guys to learn from this video, it is, guys, 2 things very important when you trade in this strategy. The first one is this thing here, your days to expiration, okay? Do not, remember, no financial advice, just for education purpose only. Do not open this trade here if you don't have, let's say, at least the very least you can go is 12 months. And that's if you really know how to manage the trade. If you don't, guys, 2 years. to be very safe, to the safe side, at least 2 years. And the second thing is delta. Do not go below 85 or something like that. Okay, for those of you beginners out there that are watching this video, I will stick with the 90 deltas, at least 90 deltas, at least. Okay, to start with. Once you start to learn how to manage your trades, things like that, you can play a little bit more fast. Okay, you can be a little bit more let's say risk averse, things like that. But at the beginning, guys, I will stick with the 90 deltas. And this strategy, guys, was very I don't say the majority of my gains, but let's say 20% of all the gains that I had so far this year and last year, it is due to this strategy. But you need to learn how to manage your trades. Very crucial that you know exactly what to do when your money, your trade goes in the money. Let's say, for example, here, just to have a quick example, once this thing here start to go down, for example, okay, from 73 like we had before, all the way down to 60 or to 40, you need to have your stop loss in plan, your trading plan, your DCAs. Very crucial, because remember, I trade this strategy mainly in futures, index, and ETFs. Why? Because if the stock go down to $20, what I'll do is I transform this strategy into something else. No matter what happening, what I'll do is, because everything that I do when it comes to options, it is long-term investing, I use derivatives to go long on my investments. Guess what? If it, let's say for example, the whatever ETF XLO, it is at $70 like Nike right now, goes down to 20. What I'll do is, guys, I turn off here this leap strategy and I turn this thing here into a long-term investing, and I start to do my DCAs. Simple. Okay, that's what I do, guys, because the thing is, if you don't have a long-term investment in your mind, my channel, my community, we don't have nothing to offer to you. If you hear things, they are gonna, let's say, use technical analysis, use the moving average, whenever this thing cross below, MACD, all this nonsense, you buy, you sell the leaps. Guys, I'm sorry. Go and watch someone else. This is just nonsense, okay? But if you have a long-term investment in mind, you like to make money, being patient, know how to do your DCA at the right time. I'm not talking about here buy stocks at $100, $90, $80. That's not how you do your DCA. Okay, you need to make the most of your money, drop your base cost as much as you can, so you can just do one DCA and thank very much. We don't throw bad money into bad money, good money into bad money. What we do is we do proper trade management and know how to trade the right products. Don't do this strategy here on GME, AMC, SoFi, Palantir, all this nonsense. Okay, use ETFs. It's not about the games, it's about being in the game in the long run. Okay, it's about surviving one more day. Very crucial that you guys understand. Okay, so in a nutshell, what we're doing, guys, we are trading here deep in the money, leaps, with a long-term investment in mind, knowing what to do, how to go from leaps to long-term investing at the worst case scenario. Because guess what, in this case, we are turning our leaps into long-term investing, but guess what? We're going to make even more money when the stock market recover. Like 2022, when the 2023 last year when the stock market recovered, and I was able to make all this money. Why? Because in this case here, I went from leaps to long-term investing, I went from cash secure put to long-term investing, I went from a wheel strategy covered call into long-term investing at the right time. So you need to know what to do. Okay, and don't forget to claim your freebie, guys. Okay, it's free anyway, and I'll put all the PDF in the future in this document here, so you can learn yourself how to trade option profitably, okay, with the proper risk and trade management. And if you want to join our Discord group, the first link on the description below, okay, and you can ask me whatever question you might have. But in a nutshell, guys, again, it is what it is. It's a very simple strategy, but one thing to let you guys go, don't forget position size. Very crucial that you do understand what position size means when it comes to trade options. Okay, subscribe to the channel, leave your comments below. I'll get back to you guys as soon as possible. All the best, stay safe, and happy investing.